Hi everyone, welcome to Logical Investing with Subhendu. A lot of YouTube channels which are there provide you information related to which stocks should you buy. Some of the YouTube channels talk about which stocks should you buy when there is a crash, which stocks should you buy because they are going up on volumes, and some provide recommendations as well. In this channel, in Logical Investing with Subhendu, our purpose is not to tell you which stock should you get into. The purpose is to help you develop a process which can then allow you to pick up your own stocks with conviction. If you as an individual investor is able to understand that and is able to then filter the specific stocks which you want to get into, the industries which look interesting to you, then you would be able to have high conviction on those stocks, and then you can finally zero down on the ideas where you want to put your money, hard earned money in. Right? That is the intent of Logical Investing with Subhendu. Today in this episode, we are going to talk about an interesting stock. We are going to talk about a company called Kiran Vyapar. Now, what makes Kiran Vyapar interesting as a business? What makes Kiran Vyapar interesting in its fundamentals? What makes it good in terms of technicals? We are going to talk about all of that. But before we do that, I wanted to let you know that please do not treat this as a stock recommendation at all. The purpose, again, I would like to reiterate, that is to help you to devise your own process and understand how to pick good companies. I am invested in this stock, so that is the disclaimer which I would want to give you. The intent is to tell you how do you find such kind of stocks. Without any further ado, let's get started into looking at the fundamentals of the business. Alright, we are on the website of LNB Group, which is the company, which is the parent company of Kiran Vyapar. And if we look at the group companies, there are multiple companies which LNB Group is invested in, or they are part of, the LNB Group. And you have LNB Renewable Energy, you have Navjyoti Commodity Management, Navjyoti Analytics, Soul Beauty, and you have Kiran Vyapar. If you look at Kiran Vyapar, it is RBI registered non-banking financial company, NBFC. Investments cover areas such as manufacturing, digital space, healthcare, real estate, energy exchange, microfinance, and entertainment. Based on the investment rationale, Kiran Vyapar plays a role of either an institutional, strategic, or an operational investor. It has a net worth of over $150 million. Now, this is all about, a summary view of Kiran Vyapar. That it was incorporated in 1995 as a private limited company, and then it has been converted into a public limited company in 2012. And subsequent to that, the company is currently a non-banking financial company, or what it basically means, it cannot accept deposits or any holding, from the customers. So it can only invest in companies. The company is engaged in the business of investments, trading, and dealing in shares and securities, mutual funds, financing, and carrying on business in accordance with the regulatory framework. As you can see, the current price is trading at around 134. The stock had touched a low of around 120, and then it is now picking up. If you see, the stock has been trading, it has touched a level of 158 in 15th June 2021, and from then on it has been stabilizing at that price, probably around these levels, 120, 123 kind of levels, and then it has just started its up move as of now. So if we look at it, in a max chart, over a period of years, the stock has been trading at a same level of it has been range bound for quite a lot of time. And at times, in 2017, it had tried to break out from the range of around 120, and then it had made a high of 201.25, and then from then on, it had come down. And then the stock is now trading at around 134. If we look at the price per earnings, the price per earnings had been fluctuating, and then if you see the PE, right now the PE trades at a very attractive value of 2.5. The earnings per share is also really high, and it is the highest earnings per share in all of the years it has been traded, as shown in the Screener website. The gross profit margin has been hovering, and it is right now trading at around 87%. Operating profit margin is trading at around 74. Net profit margin stands at 55. These are all healthy, percentages which can be looked at. Now let's go on to the fundamentals of the company. The first thing which attracted me a lot to this company is that the company's market capitalization is about 366 crores. If you look at the reserves of the company only, the reserves itself stands about 1354 crores, which is almost 4 times what the market capitalization is, which makes it really, really attractive. If you look at the current price of the stock is at 134. So the book value is 506 and the stock is trading at 134. What this basically means is, if somebody would want to set up the company from scratch, right, and invest in building its infrastructure, invest in building its own processes, get the people on board, make sure that there is a brand, all of that, it would cost per share, it would cost about 506 rupees. And however, the company is now available, the same company is available at a very cheap valuation of 134 rupees. Dividend yield is 1.12. So it is also paying out dividend. Now the next best part is the promoter holding. Promoter holding stands at 75%. The overall stock PE is at 2.49, whereas the industry PE, companies in the similar industry, okay, if we take an average of their price per earnings, we are looking at 23.9, almost 24 PE. The current stock, Kiran Vyapar, is trading at 2.5. So this makes it again very attractive in terms of its valuation. And if you look at the PEG ratio, which is also a parameter related to the valuation of the company, 0.11 is a very decent valuation. Now, if you look at the current ratios or the quick ratios, which are both liquidity ratios, the current ratio stands at 5.52. The quick ratio stands at 5.45, which is more than, both of them are more than 1, which makes it really, really strong. Now, if you look at the interest coverage ratio, the interest coverage ratio is 36.1, which is a very strong number. If you look at the change in promoter holdings over the last 3 years, there has been marginal increase of 0.15%, and the promoter holding now stands at 75%, which is the maximum promoter holding which can be there in any share. Now the Altman Z-score, which stands at 4.33, this value should be more than 3. We are looking at 4.33. All of these numbers make me feel that this price at which the stock is available right now is a reasonable valuation, and then the kind of reserves it has and the kind of market value it today has, it clearly says that the stock has room to grow. Now if we look at, the company is almost debt free. Stock is trading at 2.26 times of its book value. Company is also expected to give a good quarter. And in the past 5 years, the company has also delivered a very good profit growth of 22.32% CAGR, which is a good number by any standards. If you look at the competition, if you look at the other companies, in the industry, there are a few which has been picked up by Sreenar here. You see that the overall P levels have been in double digits, and Kiran Vyapar trades at a very decent valuation of 2.49. Now, if you start looking at the sales numbers, you see that in March 2019, the sales numbers was 35 crores. In June, it came down to 19, then 10. December 2019, it was 24. So there has been an up and down in the overall quarterly sales numbers. Starting March of 2020, where it was 6, then it has grown to 20, 28, 32, 61. There has been a dull quarter here, which is 28 crores in June 2021, but then subsequently it has increased again to 48. The operating profit margin, if you see, earlier it was around 11, 17, 56%. That has grown to a massive 75% in December quarter, 85% in September quarter, 65, 66, 63. So the overall operating profit margin or the internal efficiencies of the company, that has gone up. This is a very healthy sign for any company which is improving its operating profit margins. If we start looking at the net profit, the company's net quarterly profits have been increasing, and 49 in March 2021, then 23, 48 and 27. If you look at the EPS, that has also been growing. It's fluctuating. You can see here 5 and then 17, then 8, 17, then again 9. If we look at the annual numbers, if you look at the profit and loss for the annual numbers, you see that the sales numbers from March 2014 has grown from 45 crores to 182 crores in the trailing 12 months. What that basically means is the massive jump, almost 4 times jump it has achieved so far. There was a year in between where it had come down to 60, that was the March 2020, but post that it has posted significant amount of growth in its revenues. If you see the expenses, they have also gone up. However, the operating profits continues to increase. You see the operating profit and operating profit margin. The operating profit was at 36 crores in March 2014. That has grown to 132 crores in the trailing 12 months. The operating profit margin, it was at 79%, 80, 69, 49, 55, 29. It had come down, and then again it is continuing to increase from March 2021, and now it also in the trailing 12 months it has standing at 73%. Now, if you look at the other income, there is significant other income which has also been there, which would have been better. This is one area which you can definitely other income should be as minimal as possible. Sudden increase in other income might inflate the actual profit numbers. So we will have to take a look at these to understand a little more in detail. But overall, I feel that at this stage, the profit before tax, so the net profit, if we look at, the net profit stands at 147 crores in the trailing 12 months. So the company is going to post in its March 2022 quarter, it looks like the company is going to post its highest ever net profit and highest ever net sales at an attractive operating profit margin of more than 70%. Now, which makes it really attractive. If you look at the earnings per share, that has also, it was last year, it was 35.68, the EPS, and the current EPS of the trailing 12 months stands at 53.71, which is a massive jump. If you look at the reserves has almost doubled from 752 crores in March 2014 to about 1354 crores in September 2021. The borrowings, if you see, they have gone up. Definitely they have gone up. This is not a good sign, but then borrowings have gone up significantly. However, as we saw that the debt to equity ratio was really low. If we started looking at the debt to equity ratio, we saw that the debt to equity ratio is 0.06, which is very healthy. And then if you look at the debtor days, is an indication of how many days does it take for the company to realize the money after the product has been sold or the services have been offered. Now, if you see that the debtor days have also come down. In March 2020, the debtor days had gone up. Overall debtor days have been 5065. These are very good debtor days, and then it had increased to 1615, and in March 2020 it went up to 25. However, right now it is trading at around 6. It's at 16, which is a good sign. The overall working capital days, if you see, they had also gone up significantly. If you see the last many years data, working capital days started at 76. So the lower the working capital days, the better for a company, because it allows you, so that it tells you that you are more in control of your working capital. You do not need to infuse additional capital to keep your business running, right? So that is what it is. So in 2015, the working capital days had increased to 404. Then March 2017, it was at 573. Then it started coming down to 156. And then 99. Again, last year, March 2020, it was at 131. And March 21, it is at 52. So the lower the number, the better it is. The ROCE stands at 10% today, which is a good number again. And overall, if you can see, the promoter holding has increased from March 2019 from 71% to 74.96 or 75%. Public shareholding continues at 25% as of now. So overall, if we look at Kiran Vyapar, it looks good. There are a few catch elements, as we discussed, with the other income and all of that being a slightly high, and borrowings have slightly gone up. However, the profits or the kind of profits it is posting, it makes me feel that we can start tracking Kiran Vyapar as a stock. Now, we looked at the fundamentals. We also looked at the chart patterns. We also saw that the stock was trading at almost similar levels in a range-bound manner at this 120 to 130 kind of levels for a long time. It had made an all-time high of 200, 201 at that level. Now, my intention here is not to tell you that this is a good stock to get into right now. My intention is to tell you that when you are looking at stocks, if you are able to analyze some of its growth parameters, how has the company been growing? If the company is growing at a good pace, how is the operating margin? Whether the company is able to convert its revenue, more and more of its revenue, into bottom line or profits. If the company is able to do that, that basically means that the machinery inside is really effective, and that is helping the company to generate profits. If you are able to find out companies which are growing in their top line and they are also growing in terms of their profits, that is when you know that you have found out a company where you can put some of your money in. Now, how much of your money should be put in? As I have been always saying, you should never put more than 2 to 3% of your entire portfolio into any stock. Please definitely do your own due diligence and consult your financial advisor before you take any investment decision. The purpose, again, I would like to reiterate, the purpose of this video is not to let you know that this is one stock where you should put a lot of your money in and then you will be able to make a huge lots of money. I'm not a SEBI registered investment advisor. Whatever we cover in this video is to be considered as an educational video only. If you are able to understand some of these points, are able to analyze some of these companies in better detail, I would be happy that I have been able to share my learnings, whichever I have got, to you, so that it can make you better investors, better logical investors. If you like the video, please do hit the like button. If you are new to this channel, please subscribe to the channel and also share this channel with your friends. In this channel, we will always talk about things which will help you to understand why should a particular stock be picked up, why should a particular stock be not picked up. We will not talk about any recommendations here. We will talk about the art of stock picking and why you should pick them. So after listening to the video, please do not tell me that all right, what should be the target for this stock. These are stocks which are fundamentally good stocks. When you are looking at fundamentally good stocks, you should have a longer holding period with them. You should keep holding the stocks till the positive fundamentals continue, till the positive earnings, the earnings growth, the sales growth, the margin growth, all of that continues. When it does not, please ensure that you are re-looking at your portfolio to rebalance and take another call. But all of the buy and sell calls which you are taking should be with your own research, should be with your own due diligence. You should definitely put in money only after you have consulted your financial advisor so that you are making very wise and prudent decisions. That's all for today, folks. Thank you so much for tuning in to this channel. Please hit the like and subscribe button if you have not already done so, because that really motivates me to create videos of this, to share my learnings with all of you. Thank you so much. Once again, happy investing, happy logical investing.